overall, the earnings was pretty good. And if this Iran war, doesn't drag on, I think they're going to have a great second half. Inventory is low. They've managed it very well. That means their pricing is pretty steady, up a bit, and truck sales are still going well despite the $4 gas prices. So second half production could ramp back up if the war doesn't drag on.
If the war doesn't drag on and if the company gets the relief from paying all those tariffs, my understanding is that increased outlook that Paul referenced does reflect the benefits of tariff cost relief tied to the Supreme Court deciding to strike down those reciprocal tariffs that President Trump imposed.
Yeah, they had a $500 million benefit. Less cost from the tariff. There could be more coming, and right now their inventory is at actually below target, especially in the pickup truck side. So and pickup trucks are the highest profit margin vehicles for them. So if they can keep production steady, increase the dealer inventory a bit by raising the production. That 8.6% adjusted EBITDA margin that they had in North America could stay up there or even get even better.
What's GM saying about, you mentioned the trucks, and that's what Americans, we like to drive, big trucks, SUVs, all that kind of stuff here. But with gas north of $4 a barrel, what's GM saying about the demand for those big vehicles?
Yeah, they're actually very cautious. The gas prices are up, like oil prices up like $3 today, and I think that's having an impact on the consumer discretionary stocks, including GM, despite its a very good earnings results. But they are very cautious. Not only demand, but if elevated oil prices are staying up, it could trickle down into material costs, even though they haven't seen a huge impact from that yet. But a prolonged war could impact it. But the other thing that we've talked about is this K economy, right? It's very interesting to see what's happening today, where the high end, expensive vehicles are actually doing well. Where we're seeing decline is really on the cheaper vehicles, where buyers in that segment are more cost conscious, and I think they are holding onto their purse strings. But it's all about the war.
Yeah, absolutely. It's all about the war. That affects everyone's willingness to spend, their mood when it comes to spending. What is GM offering by way of low-cost vehicles? How big of a lineup offering does it really have?
They do. I mean, they have, the Chevrolet Trax is selling very well. The Buick Envision, not bad. They do have a few vehicles. The EV Chevrolet Bolt, they just rolled it out, is one of the most popular EVs out there. That's going to help them, reduce some of the EV losses there. So they have a pretty diverse portfolio. But I think if truck sales maintain where it's at, consumer sentiment gets better if the war ends, and even the commercial side, if commercial demand stays steady, I think they're going to have a decent second half.
Ford reports tomorrow after the close. Steve, is there a read across from GM over to Ford?
Yeah, definitely. Ford relies much more on their pickup truck. The F-150 is, the top selling pickup trucks in the U.S., not just to consumers, but to the commercial buyers. So it is a positive read across to Ford. The only thing that's on the risk side is, they had some delays on ramping up the F-150 or due to the Novelis aluminum plant fire last year. But again, look, they're going to get that aluminum shortage fixed up. And if the war ends, they're going to have to ramp up the F-150 production. and that's only going to improve their unit costs and profitability in the second half.